Hello, dear friends. Welcome to a new session on budget analysis. In the session, we discuss the four important deficit concepts in the union budget, namely revenue deficit, effective revenue deficit, fiscal deficit, and primary deficit. Before getting into the specifics of these deficit concepts, let us see the constitutional provisions regarding budget. According to Article 112 of the Indian Constitution, the Union budget for a year is referred to as the annual financial statement. It is a statement of the estimated receipts and expenditures of the government in the financial year, and as you know, the financial year begins on 1st April of the current year and ends on 31st March of the following year. Overall, the budget contains estimates of revenue receipts and capital receipts, ways and means to raise revenue, estimates of expenditure, details of the actual receipts and expenditures of the closing financial year and the reasons for any deficits in that year, and the economic and financial policy of the coming year, that is the taxation proposals, prospects of revenue, a spending program and introduction of new schemes and projects. In Parliament, the budget goes through 6 stages. First, presentation of the budget by the Union Finance Minister, then general discussion, scrutiny by departmental committees, voting on demands for grants, passing an appropriation bill and passing of the finance bill. The budget division of the Department of Economic Affairs and the Ministry of Finance is the nodal body responsible for preparing the budget. Now, the budget is in the public domain, and we are here to look into the 4 important deficit concepts in the Union Budget 2023-24. We have the revenue deficit, effective revenue deficit, fiscal deficit, and primary deficit. Let us begin with the revenue receipts. Here we have the figures. Revenue receipts 26,32,281 crores of rupees. The figures here are in crores. So revenue receipts 26,32,281 crores of rupees. And as you know, the revenue receipts consist of the tax revenue and the non-tax revenue. Here see the tax revenue. The tax revenue 23,30,631 crores of rupees. And the non-tax revenue, we have the figure 3,01,651 crores of rupees. 3,01,650 crores. So total revenue receipts, tax revenue plus non-tax revenue, 26,32,281 crores. Now let us move over to capital receipts. As you know, the total receipts consist of revenue receipts and capital receipts. So move over to capital receipts. The capital receipts and the present budget, the figure is here, 18,70,816 crores. And the capital receipts consist of recovery of loans 23,000 crores, other receipts 61,000 crores, and finally the very important component here, borrowings and other liabilities 17,86,816 crores. So please remember this figure because we will get back to this figure later. 17,86,816 crores. So the total capital receipts consist of recovery of loans, other receipts. Here other receipts means disinvestment receipts. And here the figure for borrowings and other liabilities 17,86,816 crores. The total capital receipts 18,70,816 rupees. Now we have the revenue receipts and the capital receipts. So we arrive at the total receipts. Revenue receipts 26 lakh 32,281 crores. Capital receipts 18 lakh 70,816 crores. The total receipts 45 lakh 3,097 crores. In fact, this is the total budget outlay because the figure is total receipts 45 lakh 3,097 crores. Okay. Now total expenditure, it is same as total receipts 45 lakh 3,097 crores. 45 lakh 3,097 crores. And the total expenditure consists of expenditure on revenue account and expenditure on capital account. So here see the figures. On revenue account, see revenue account 35 lakh 2,136 crores, and of which interest payments 10 lakh 79,971 crores. Grants in aid for creation of capital assets 3 lakh 69,988 crores. So remember that figure, these two figures are interest payments and grants in aid for creation of capital assets, because we will come back to those two figures later. Okay. So the total expenditure consists of expenditure on revenue account and expenditure on capital account. See the expenditure on capital account. The figure is 10 lakh 961 crores. So 35 lakh 2,136 plus 10 lakh 961 is equal to 45 lakh 3,097 crores total expenditure, and it is same as the total receipts. Okay. So now let us get into important concepts. Okay. Effective capital expenditure. So it is 13 lakh 70,949. How this figure is arrived at? Let us see. Grants in aid for creation of capital assets, we have seen the figure 3 lakh 69,988 crores, and expenditure on capital account 10 lakh 961. So 10 lakh 961 plus grants in aid for creation of capital asset 3 lakh 69,988 crores will give you the effective capital expenditure. So even though grants in aid for creation of capital assets come under revenue expenditure, since it is used for the creation of capital assets in the states, it is treated as capital expenditure. Remember, even though it comes under revenue expenditure, since it is used for creation of capital assets, it is treated as capital expenditure for the calculation of effective capital expenditure. So 10 lakh 961 plus 3 lakh 69,988, we have the figure 13 lakh 70,949. That is the effective capital expenditure. Now, revenue deficit, very important concept. The figure is 8 lakh 69,855 crores. How this figure is arrived at? Revenue deficit. Okay. So we have the revenue expenditure, expenditure on revenue account, that is the revenue expenditure. It is 35 lakh 2,136 crores. 35 lakh 2,136 crores. And here revenue receipts 26 lakh 32,281 crores. So the difference is revenue deficit. So the revenue expenditure is greater than revenue receipts. Naturally and normally, quite understandably, there will be deficit, revenue deficit, and the figure is 8,69,855 crores. And this constitutes 2.9% of the gross domestic product. Revenue deficit in the current budget is 2.9% of a gross domestic product. Now, what is effective revenue deficit? Effective revenue deficit is only 4,99,867 crores. How this figure is arrived at? Let us see. We have seen the revenue deficit, that is 8,69,855. That is the actual revenue deficit. And you subtract grants in aid for creation of capital assets. So we have already seen that it is, since it is used for creation of capital asset, it is treated as capital expenditure, even though it comes under revenue account. So it is 3,69,988 that is subtracted from the revenue deficit, and we get the effective revenue deficit. And this effective revenue deficit in the current budget constitutes 1.7% of the gross domestic product. 1.7% of the gross domestic product. Now, let us move over to the most important concept of deficit in the budget, namely fiscal deficit. And the fiscal deficit 17,86,816. We have seen this figure already, borrowings and other liabilities. So fiscal deficit is same as the borrowings and other liabilities, 17,86,816 crores. Now, how this figure is arrived at? How the fiscal deficit is calculated? See the calculation. Total expenditure, the figure we have seen 45,03,097 crores. Revenue receipts 26,32,281 crores. And the difference, and again subtract recovery of loans 23,000 crores, and other receipts 61,000. So the three green bands are added together, and the difference is taken from the blue band total expenditure, and we get the fiscal deficit. So the fiscal deficit actually is revenue receipts plus recovery of loans and the receipts. So the three together and the difference from total expenditure. So since the total expenditure much higher than these three taken together, we have a deficit, and the deficit is 17,86,816 crores. So let us move over to the primary deficit. So I hope the fiscal deficit concept is clear. Okay, let us move over to a primary deficit. And before that, let us see this fiscal deficit. This budget is 5.9% of GDP. It is a bit lower than the last year budget. Okay, so 5.9% of the gross domestic product. So let us move over to the primary deficit. The primary deficit is 7,06,845 crores. 7,06,845 crores. How this primary deficit is arrived at? See the calculation. We have the figure for the fiscal deficit, that is 17,86,816, and subtract the interest payments from that. So the interest payments 10,79,971 crores. So subtracting interest payments from the fiscal deficit, we get the primary deficit. So primary deficit is fiscal deficit minus interest payments, and this constitutes 2.3% of the gross domestic product. And we have gone through the four important deficit concepts: revenue deficit, effective revenue deficit, fiscal deficit, and primary deficit. So it is time to wind up. Before that, let us get into the projected GDP in the budget. Okay. The GDP, the gross domestic product for budget estimate 2023-2024 has been projected at rupees 301,75,065 crore. 301,75,065 crores. And here in the budget, it is assumed that there will be a 10.5% growth of the estimated GDP of 273 lakh 7,751 crore for 2022-2023 first advance estimate. So the last year budget, the first advance estimate 273 lakh 7,751 crore. That is the advance estimate for the GDP for the last budget projections. But here we assume that there will be a 10.5% GDP growth. It is nominal GDP growth, and if that happens, the GDP will be 301 lakh 75,065 crores. I hope the concepts are pretty clear. We have discussed the four important deficit concepts: revenue deficit, we have the effective revenue deficit, fiscal deficit, and the primary deficit. And we'll see again. Thank you.